Welcome back to Explain the Charts, everyone. Today, August 15th, 2025, we're taking an exhaustive look at Apple, ticker symbol Apple, combining recent news and an in-depth chart analysis. First, let's address the critical current events impacting Apple, starting with the securities fraud class action lawsuit. The lawsuit alleges Apple misrepresented Siri's advanced AI features and their delivery timeline for the iPhone 16 cycle. This led to a significant stock decline of almost 5% on March 10, 2025, dropping from $239.07 to $227.48. A second drop of over 1% occurred on June 9, 2025, as the Worldwide Developer Conference failed to deliver new AI updates, with the stock falling from $203.92 to $201.45. Let's zoom into the daily chart to visually confirm these significant drops. You can clearly see the sharp decline in March, indicating a strong market reaction to the delayed AI features. The candles around March 10th show a substantial red candle with higher volume, reflecting investor disappointment. Similarly, the June 9th candle also demonstrates a downward move, albeit less dramatic, coinciding with the underwhelming WWDC event. Now, let's broaden our view on the daily chart to understand the longer-term trend. Beyond the AI controversy, Apple is making substantial investments, pledging an additional $100 billion to expand U.S. manufacturing, bringing their total commitment to $600 billion over 4 years. This could potentially exempt Apple from future tariffs on imported chips, a significant long-term bullish factor. Morgan Stanley has also raised its September quarter iPhone build estimates by 8%, citing elongated replacement cycles and pent-up demand, which is very positive for iPhone outlook. However, Berkshire Hathaway recently reduced its stake by 20 million shares in the June quarter, though Apple remains their largest holding, which might create some selling pressure. Conversely, other major investors like Duan Yongping and Gamco investors have increased their holdings, showing divided institutional sentiment. Looking at the daily chart again, we can identify key price levels. The $200 to $202 region acted as a strong support zone following the June AI news, preventing further significant downside. Conversely, the $230 to $235 level appears to be a significant resistance area, particularly after the March decline, as the price struggled to reclaim those levels. The current price of $224.72 as of August 15th sits comfortably above both the 50-day moving average at $209.13 and the 200-day moving average at $213.37. This positioning, with the 50-day above the 200-day, technically indicates a bullish long-term trend, despite recent short-term volatility. Switching to the 1-hour chart, let's examine the more immediate price action. We can see that in late July and early August, the price was trading within a tighter range, roughly between $208 and $215. The surge on August 6th and August 8th broke this consolidation, pushing the price towards the $220 and then the $230 levels. This rapid ascent, marked by higher volume in many hourly candles, suggests strong buying interest in the short term, possibly fueled by positive iPhone outlooks or general market optimism. However, the last few hourly candles on August 14th show some minor pullbacks, indicating potential short-term resistance around the $233 to $235 mark. Now, let's scrutinize the 15-minute chart for microtrends and potential intraday trading opportunities. From August 11th to August 14th, we observe relatively choppy trading within a broader uptrend. There are clear attempts to push above $230, followed by slight corrections, suggesting a battle between buyers and sellers at these levels. Volume spikes during these upward pushes indicate buying strength, but a lack of follow-through often leads to quick pullbacks. Look for sustained high volume on breakthroughs of recent highs, especially above $233 to $235, as this would signal strong bullish momentum. Conversely, A break below the recent hourly low around $227 with increased selling volume could indicate a short-term reversal. Traders should watch the $228 to $230 area closely. A strong close above it could provide an entry point for further upside, while a clear break below could lead to a retest of lower support. Reverting to the daily chart, let's summarize our analysis. The stock has shown gains over the past week and month, recovering from the AI-related dips. The bullish case hinges on Apple's long-term investments in U.S. manufacturing, potentially avoiding tariffs and strong iPhone demand forecasts. Furthermore, the stock is trading above its key moving averages, reinforcing a positive technical outlook. The average 12-month analyst price target of $236.93, with a high of $280, suggests a continued belief in Apple's growth potential. However, the ongoing securities fraud lawsuit and criticisms about its lagging AI strategy remain bearish overhangs. A major near-term catalyst would be any positive announcement or development regarding Apple's AI features, which could reignite strong investor confidence. Conversely, further negative news or delays in AI integration could exert downward pressure, potentially testing the 50-day and 200-day moving averages as support. For traders, key price levels to watch are immediate resistance around $235 and strong support at $220 to $222, and the critical zone around $200 to $202 if a deeper correction occurs. A breakout above $235 could target the analyst average price target of $236.93 and beyond, while a significant drop below $220 would warrant caution and a reevaluation. The market's reaction to future AI developments will be paramount in determining Apple's short and long-term trajectory.